what we're seeing now, and this is not just in dollar terms, in all other currencies, we're seeing these currencies sink. And what I think this is telling us is that there's trouble in the banking system, and the central banks are going to pivot very soon and inject a whole lot of more liquidity or funny money into the system. And I think that's what gold is telling us. Wednesday, March 6, 2024, Maneco 64, home of alternative economics and contrarian views. So we're going to look at gold and the banks today, and in particular the FDIC. FDIC, of course, is the deposit insurance for the U.S. banking system. And I've noticed there's some kind of problem with the FDIC, in my opinion. And that could be pointing to trouble with the banks. Before we start, just want to talk a little bit about a few developments in the U.S. and in the U.K. In the U.S., I noticed that Trump is forging ahead. Nikki Haley, of course, is just a bit of a joke. She's supported by the Democrats. But again, I would say be careful with the political theater. Focus on yourself. But it looks like Trump will be the candidate for the Republicans. And I think whoever wins in November, there will be trouble in the U.S. Either camp will not accept the result, and therein lies the problem for the United States and the dollar as well, I would say. It was nice to hear that Victoria Nuland resigned from the State Department. Apparently she was the third most important diplomat. And if you remember well your history, and it is history now, it's 10 years ago, she's the one who helped orchestrate a coup d'etat of a democratically elected government in Ukraine back in 2014. She was on the phone. We've got tape of her talking to the U.S. ambassador in Kiev. And he said, what about the EU? Are they on board? And she said, F the EU. So that's Victoria Nuland. I think Dr. Ron Paul, I listened to him yesterday. He said she's never seen a war that she doesn't like. And it doesn't matter what party is in power. She's always been around power. She was part of the Clinton administration. She was part of the Bush-Cheney administration, part of the Obama administration, and part of the Biden administration. And she's a neocon, and she's anything but a conservative. She's a Trotskyite, my goodness, and a communist. And good riddance to her, really. She's caused a lot of misery and death in the world. But what about in the UK? Well, today we've got our budget. They usually have one of these twice a year, spring and autumn. And the Chancellor of the Exchequer, he will stand in Parliament for about an hour. In the past, they could choose a drink of their liking while they gave out the budget. I remember Ken Clark had a glass of whiskey. But nowadays, everything is so politically correct, he'll probably not even drink water or anything. But I've always said, even back in the day, back in the 90s, when I was realizing that government takes your money and wastes it, right? I always thought, when I started earning quite a good amount of money, when my career started taking off in the mid to late 20s of, I thought, why should I give loads of it to the government? And my gripe with the budget is that they give and take. It doesn't really matter. We're supposed to get a 2% cut in the national insurance tax. Yes, it's going to help some people. On average, £40 a month. It's negligible, and the tax burden will still be the biggest on record. Ideally, a budget would take a few minutes to be announced by the chancellor. And why do I say just a few minutes? Mario, doesn't the government need to help everyone? And no, the government needs to do the least possible and take the least possible from us, spend the least possible, fund itself through import duties. I would say income tax, I think, is an abomination. And and the mainstream press and the politicians make it seem like they're giving us something by cutting taxes and doing so and so. They're just not stealing as much from us. So keep that in mind about the budget. It's all theater, unfortunately. In the day when the chancellor presents his budget in 3 or 5 minutes, I'll be happy, because that means there will not be interfering so much in our lives. So back to gold and the FDIC. Of course, most of you have seen that gold has broken out. Yes, we still have not gone through the high from the weekend session, really, back in December, when gold futures spiked up to almost 2150. Of course, that session is very thin in terms of liquidity. So you could argue it was, at the time, it was nice to see gold spike that high, but it came right back down. It wasn't really based on much, I would say. So yesterday we got to 2142, and I'm talking about the spot price. And I was asked by someone, are they going to smack gold back down from here? And I said I'm not really concerned, because I've been stacking gold and silver for, over 20 years now, and I do it. Yes, sometimes I need to have an emergency. I need to liquidate some for fiat currency, but my view is that it's insurance, and that hopefully I'll never have to touch it. In an ideal world, you're not looking to get rich with anything unless you're Jesse Livermore or a speculator, and those are rare. And even Jesse Livermore, he made and lost fortunes many times over, and by age 60 he was so ill, and I've heard from Jim Sinclair in the past that he was bipolar, but it wasn't an easy profession being a speculator. He committed suicide at age 60. So if you want to be a speculator, just keep that in mind. I think the most important thing in life is to find what you're good at and try to create value over time, and be patient. If you're young, in your 20s and 30s, I know things are topsy-turvy right now. It's difficult to get on the real estate ladder or housing ladder, and everything seems against you, but you need to be patient. Things will work out, and don't try to get rich quick. Yes, being rich is a nice thing, I guess, but doing what you love and producing or creating value is what is most important, and gold and silver will protect the surplus wealth that you have created. I'm not saying you should put it all into it, but it's a good way of saving liquidity. So that's why I'm not concerned about the price. Yes, they might try to get it back below 2100 or even 2000, but I think what we're seeing now, and this is not just in dollar terms, in all other currencies, we're seeing these currencies sink. And what I think this is telling us is that there's trouble in the banking system, and the central banks are going to pivot very soon and inject a whole lot of more liquidity or funny money into the system. And I think that's what gold is telling us. Silver will catch up. And the miners will catch up as well. I think they're kind of being given away right now. So I've added on. Actually, I had gotten out of my miners last year. I've added on a little bit now, even though I'm cautious of having too much investment in the system. That's up to you to decide. So what about the FDIC? Well, the FDIC publishes a quarterly banking profile. And I remember last February, before the crisis, I had John Titus on, and he was talking about these unrealized losses. And we were actually looking at these charts here that the FDIC publishes every quarter of unrealized gains, losses on investment securities. As you can see, the beige part of the line is available for sale securities, and the blue ones are held to maturity securities, which means unless the issuer of the security goes bust, you should get all your money back at maturity. Of course, you'll probably be very debased in terms of purchasing power. But as you can see in the third quarter, and the latest number here is for the third quarter, was it matched the third quarter from 2022, 675 billion in loss. And at the time, John Titus also showed me that a lot of borrowing was being done through the Federal Home Loan Bank emergency borrowing, because there was it's taboo to go to the Fed window. People will say, what's wrong with you, right? With your bank if you have to borrow from the Fed. So they went to the FHLB. And lo and behold, John Titus's timing was very good, because a month later, after I interviewed him, we had the whole banking fiasco of last year, where Silicon Valley Bank collapsed. And the Treasury had to bail out depositors that had over 250,000, because the FDIC doesn't have enough funds to bail out a lot of banks. If there's a systemic collapse, it doesn't have enough. Yes, if the Nebraska Community Bank goes bust and doesn't have that many assets, they can cover that, and they can get another bank to take over that. But if the too big to fail are in trouble, or the big regional banks are in trouble, and more than one, the FDIC will have a big problem. And the FDIC, these reports come out every quarter, and you can check this yourself. And I'll read here from their page, FDIC Quarterly Banking Profile. And it says results are published approximately 55 days after the end of each quarter, i.e. 55 days after March 31st, June 30th, September 30th, and December 31st. So in the last couple of weeks, or even before that, I had a look, 55 days after the 31st of December was 24th of February. And here we are, March 6th. So that's what, about 11 days after this approximately 55 days. And we've seen nothing from the FDIC about the fourth quarter profile. I spoke to Clive yesterday in our chat about about what's going on, and I interviewed him yesterday for my video, and he said, well, it could be that they can't decide on what to publish because there's trouble there. Yes, I think it's worrying that they haven't come out with this report. Are they trying to hide huge losses? Or are they having trouble compile all the data? I mean, if you are more of an expert in the banking sector, maybe you might know something that I don't know. I've tried to contact people like Christopher Whalen. He's a banking expert. He's on Twitter. and I sent him a message on LinkedIn. I think he worked for the New York Fed, and he's a banking analyst. And I asked him, is this a big thing, that the fact that they haven't published it? But I haven't heard back from him, unfortunately. But I think that's something you should keep in mind. And I think it's one of the reasons gold is going up so much, because gold and silver are basically the anti-bank money. Bankers don't like gold and silver because it puts like a straitjacket around them. They can't lend as much fraudulent fiat currency, fractional reserved currency out of thin air. Yeah, gold disciplines them. They can only lend what they really have, and that's what it should be. I know even under a gold standard they used to fractional reserve, but under the current system, the gold going up very quickly like it is now and making new highs is a red flag. It's a big warning for the whole system. It means the banks are in trouble, mostly. People talk about, gold being a sign that there's inflation, but it's also a sign of banking troubles. And the other thing is that the bullion banks out there, they trade gold as if it was a fiat currency. They fractional reserve it too. So when there's trouble, they can be short squeezed, even though there are some analysts out there who think that the bullion banks never go naked short. Well, they go naked short the Forex, the fiat currencies versus the dollar. Why wouldn't they go naked short in gold? And so I think that's what's happening out there. Yes, Bitcoin made a new high yesterday, and then it dropped like $9,000. I think it's come back up. And publications like the FT, well, they're talking about Bitcoin, but they had a little piece on gold. And is that a good thing that the FT is pushing Bitcoin or making Bitcoin sound more important than gold? I don't really care, because the FT has been wrong about gold, and they're a mouthpiece for the banks. So they don't want you to know how important gold is and how you should have gold. And I've spoken about this. This is nearing its 20th anniversary. It's an editorial that I read back in April of 2004, where the FT said that, they said going gold. They said the pointlessness of holding bullion continues to sink in. And I even wrote here that at the time gold was at $400 an ounce. So I'm glad I didn't listen to the FT, and I saw through their propaganda. And it was back then that I realized that everything you read in the mainstream press, unless they're reporting a real event, everything you read is pretty much BS and propaganda. And you should do your homework. Do your research and your homework and decide for yourself. And with that in mind, just wanted to remind you that it's still not too late to get gold and silver. I went up to London yesterday to see Oliver and Simon from Gold Investments. They said most people are still selling, which I find pretty amazing. But anyway, check out the description of my video. Of course, I've got an affiliation with Gold Investments here in Britain, and I've got a couple of affiliates in the United States. But you should do your homework and buy it from whoever you want. You shouldn't buy it from my affiliates just because of me. But I can vouch for them, though. Anyway, let's check where the markets are this morning. So yeah, I've been checking that FDIC website regularly, like refreshing it, waiting to see the December, the fourth quarter profile, and nothing. So anyway, you can check it yourself. Let's look at where the markets are. Then it's 8:12 4:24 a.m. London time. Spot gold is actually down 30 cents, so it's unchanged. 21.28. High's been 32 and the low 23, so fairly narrow range. Silver's up slightly, 3 cents at 23.70. We got up to 24.24 yesterday, but we saw the stock markets come off quite a bit, and that hurt silver more than it did gold. Right now, the Dow futures is up 50 points, NASDAQ is up 90, and the S&P is up 12 points. To the currencies, they've been pretty steady as well, which shows me that the move in gold is more not really related to dollar weakness, but it's related to all fiat currencies. All fiat currencies are weakening. So right now, I won't even go through them, except for the dollar is a little weaker than the yen. It's down a third, just below 150. The dollar's pretty steady versus the yuan. Let's check some of the other currency, the Aussie dollar and Canadian Kiwi. Not much going on there, so we'll skip those. Commodities, crude oil is up 0.5%, just above 78. The WTI crude, Brent is at 82.10, up 0.25%, and platinum is still undervalued. I think, it's still below 900. It's up $3, but I think there might be some opportunity in platinum. One of my friends said he plays platinum through a company called the ticker's PLG. If you want to check it, I'm not advising you to buy it, but if you're interested, have a look. High grade copper, that's up 0.33% at 386. What about the bond market? Well, the bond market is pretty steady. The 10-year yield is around 4.16. It has come off a bit. But to all those people out there who've been saying that higher yields are going to hurt gold, I was looking that back in July 2020, when the treasury yields started moving higher from below 1%, gold was trading up from 1,800 to like 2,000 in the month of July 2020. And here we are, almost 4 years later, and the 10-year yield is 4% higher, or 3.5% higher, and gold is at 2,100. So that's pretty interesting. It's pointing to the fact that I think, as I said earlier, that central banks are ready to pivot big time, and they might have to do a few more trillion of QE. What will cause them to do that? I don't know. We'll have to wait and see. But I think when it happens, we'll know what it is, right? Because it'll be something big. So with that, I won't keep you any longer, and I wish you a great day. Take care. Bye.